So yeah, okay, let's start. Okay, for those who are joining for the first time, my name is Kai Jin. I'm a second year student in doing econs and finance lah. So I'm doing this sharing out of my own time and passion. I've been doing investing for about 5 years or so. So more of like trying to at the same time trying to get to know more people that have of the similar interests, at the same time to learn from them as well lah. So I'm just doing this to learn for myself as well as to hopefully share a little bit with the rest as well. So what we're gonna do this week is actually a continuation from last week, as well as a bit of summarization of what has actually went through this month itself for the month of April. So yeah, let's go. So okay, we have covered for the first week, we have talked about financial literacy, followed by global affairs, then the portfolio management, before we lastly, which is what we are doing last week and this week, which is company valuation. So what we want to look into is the economic outlook business, the top-down approach. So I strongly believe in FA, fundamental analysis, and I shared on various approach on how we can approach investment using it to orientate around fundamental investing lah. So I mean, there's more than one way out there. There is like big value investing, factor investing out there, but for this time around, we'll be just doing on fundamentals. Okay, so we'll touch on the economic outlook. I will just share a bit about what's going on for the past 2 weeks, within this week and last week itself. Is the ongoing trade war. It hasn't died down yet. Be whether there's COVID or not, it's still ongoing lah. So oil price has plummeted below $0 last Tuesday, if my memory serves me right. And this actually have further impacts on Singapore in terms of bank and stuff like that. So right now, what the whole oil industry or the energy industry is, what they are looking for is people to actually buy. They are paying people to buy oil, to hold oil for them. Correct me if I'm wrong, but yeah. So it more or less is going to take a toll on people that are heavily invested in oil lah. And I'll get to that in a bit regarding the local banks and stuff. Individual countries, we have to look out for, on the economy scale, we have to look out for their rules and regulation lah. So for example, if you want to invest into, for example, you bought into a company or stock and you know that they does invest into other countries as well, you have to take into account as what is the rule and regulation, their law within that particular country. For example, if you want to look into REITs, what are the regulations down there? What are the master lease, the lease, for example? I'll dive more in depth as we goes on. Yeah. As for industry and the sector studies, we want to understand what are the innovations. Are they the leading within the economy? So for example, within tech, you know that Apple, in terms of innovation, they are one of them. However, when we understand Apple is, when you know their business model, which is what I'm going to talk next about, business outlook, is that Apple is not selling devices. What their whole business is actually about lifestyle. And I shared a bit on this last week that you don't see a MacBook user with a dusty MacBook lah. So that's one essence where you can look at it. As for business outlook wise, we want to look into the growth of the company, their abilities, to innovate. How are they doing comparative to their peers? Is it a very strong competition, or are they way beyond, way ahead, in their particular industry? For corporate management, what you look out for is the integrity. You must have zero tolerance for corruption. Because when you're investing in the business, in the sense that you yourself, you can take it as you yourself is the CEO of the company. You sort of run the company without actually running it. So yeah, you must treat it like your baby, like how I mentioned last week. Yeah, it's like choosing your girlfriend or boyfriend or your future husband and wife. Yeah. So to find out a little bit more about their corporate management, you can go to their website. Normally it's under the investment relation, then you can read under their corporate governance lah. So lastly will be the knowledge. You want to understand the valuation and understand how the company is being valued. The business itself lah. So you can read through their annual report, understand their financial statements. So for example, various companies got different way of understanding their financial statements. So certain company will have a higher debt to equity, for example, a heavier liabilities in a sense, probably because they hold a huge number of inventories. Whereas certain companies like the tech, they tend to hold lesser inventories. Like for example, cloud computing company because everything is virtually up there lah. Yeah. Okay. I'm revisiting valuation for this week itself is because last week there is many I won't say many, but there is people still unsure about how the terms came about and how do we understand the terms itself. So price to earning ratio, which is PE, which we've commonly seen, is actually essentially trying to understand, for example, if let's say the P ratio of a company is 7, it means that for every $7 that you put into the company, you get $1 back. I mean, that's the very layman term lah, but there's more to it lah. So in terms of understanding, so price to book value itself is, if let's say, for example, today the company would go bankrupt, and they sell everything. So what is their value? So for example, if the valuation is, the share of the valuation is supposed to be $10, so their P, and the share is trading at $10, means the price is at $10. The PB is supposed to be 1. Yeah, it is 1 lah. So if let's say, for example, if let's say I liquidate the entire company, it sum up to be $20, and I'm trading this company at $40. So the PB ratio is 2, because you're trading 2 times the valuation of the net asset value. Current ratio itself is actually the current assets to the liabilities. So current assets and current liabilities is slightly different from total assets and total liabilities lah. Like I mentioned, current assets is more on short term, probably within the year period, whereas for total assets and total liabilities is on a longer range period lah. So maybe there's depending on when the new payback or when it's going to appreciate in value or mature in terms of value lah. Return of equity is essentially stating on what do you get back lah in terms of the invested amount and everything, inclusive of like the profit and everything, profit loss in layman term. But I think the more complicated part that people don't get it is the dividend itself. For those who know this already, so just bear with me a little. Dividend is nominal, whereas for dividend yield is in percentage form. So for example, one very good example, if let's say the share price is $1, correct? The dividend yield, the dividend that you're receiving is 10 cents. This show that the dividend yield, this result that the dividend yield will be 10%, correct? So if let's say the price of the stock would go up to $2, the dividend yield reflected will be 5%. So that's the difference. So in current times whereby the market is currently down, there is a lot of stocks out there, especially REITs that yields attractive dividend yield at about like maybe 8 to 12% or so. I won't say it's a good indicator at this point of time. But I would say to really look and understand the business itself, to go and see whether are they still able, to pay out that kind of the dividends and stuff like that. So if let's say y'all got any more, like if you like me to explain a little bit more in depth, y'all can leave the question in the chat, then I'll get to that at the end of this whole thing. So moving on is, we want to piece together everything and try to understand how we can proceed on and start doing something with hopefully our savings in this current time lah. So be it the type of portfolio you want to look into, growth, income or savings, dependent on your kind of risk appetite. Like I mentioned to you, risk is really dependent on that particular individual. For the conventional way of looking at risk is high risk, high return. But for me, personally my personal opinion is how I look at risk is the more knowledge you have, the lower risk you get. At the same time, you get higher returns. So it's essentially of understanding the business as a whole, therefore you know what you're getting into. It's more of like let's say for example, you want to swim, correct? If you have experience in swimming, it's not risky when you jump in the pool. But then there's also the unsystematic risk whereby you might get a leg cramp lah. But that's beside the point because that's the risk that you cannot control. But the risk that you can control is the ability to swim. So if let's say you don't know how to swim, jumping in a swimming pool obviously is risky for you in a sense. The possibility of you drowning is pretty high. So that's where you can gauge on how you can view risk individually lah. Yeah. So what you want to do is every month if you got a certain kind of income, for those that are working, maybe you can set aside a savings. But obviously I didn't put any number down is because it really depends on individual. Like some people are already paying their bills, some people is not. So those that are not, I will urge you to save even more. Don't spend. Especially times like this. maybe save about 20-30% of your income. Then from that savings itself, try to have multiple accounts. I'm not saying I have 10 accounts, but maybe like 2 or 3 accounts. Then the really differentiate, like really separate them and really diligently and with discipline to manage them at the same time. So from that savings account, maybe you can invest like maybe 80% of your money into so the remaining 20% you can keep as cash in terms of rainy days or whatsoever lah. Then whatever that dividend like whatever dividend you get from your invested portfolio, reinvest the money. And that's where you can start to see the snowball effect. And you can start to see your money grow, like in essence. But I think one thing you should take note of is investment is not, don't view investment as a quick cash or the money making tool. It is not supposed to be a case. It's supposed to be a case whereby it sort of like aids in your savings in terms of generating a higher return, higher percentage, higher interest comparatively to putting into a bank or getting a standard fixed D or savings plan lah. I have nothing against them, but as in before we do any investment, I think it's good to understand at what you're getting into lah, in a sense. Okay, so for now we'll review on, I'll continue on what I left off last week on the SIA, whether is it worth investing into SIA in the long term or whatsoever. So yeah, let's look at the SIA. So I shared with you guys last week SIA, they have actually filed for funds lah. I mean their needs for funds lah. So Temasek Holding and stuff like that have actually announced that they were going to raise 8.8 lah. So in a sense that in terms of bonds and cash as well. So 5.8 billion in terms of issuance of new equity, as well as another 3.5 billion in terms of MCB. MCB is convertible bonds lah, in a sense that after upon maturity, you might be able to get it back in terms of shares or cash, depending on what is stated. So yeah, so when you invest into SIA, you have to take this into account of this 8.8, which is going to devalue the value of SIA share. At the same time, in the long run, they have to pay back this amount. It's not free. So this is actually considered as liability. So whatever liability we are looking at on the balance sheet, we must add this money in as well. But that's not all. Sometime later, Virgin Airline has actually announced that they are not doing very well, and actually the virus have actually affected their business quite dramatically lah. And SIA has actually 20% stake in their company itself. So this reflects in terms of the future earnings of SIA as well. So this is another consideration for those who want to get the company. Then came this, whereby it's stated that over about half of travel companies has actually, in terms of the airline business, they have actually declared bankrupt lah. Those smaller companies that are not able to last through times like this. Yeah, because planes has been sitting on the ground in the airport and stuff. Yeah. And the most recent one, I mean, you can see in terms of business time, you can see that actually they are requesting for more lah, 15 billion cash call. And we can see from this that SIA is actually not doing very well. However, this is all short term. If you want to view long term, this is just only my opinion, but I feel SIA will still continue. I mean, nonetheless, they are the face of Singapore in terms of the travel industry and everything. Like for business, corporate, or like bigger events. Like for example, if let's say there's a Singapore representative going to an overseas country, they'll definitely fly SIA. So that's given for sure. They have the backing of Temasek lah. That's one consideration if you want to put into. But other than that, do your own research if you want to get into SIA. If not, yeah, let's move on. Okay, so today itself, I will try and do a more surface approach in terms of evaluating our local banks itself lah. Okay, so on the right side of the screen, you can actually see the top 10 banks in terms of their revenue. They're within Singapore itself. I didn't put in like Bank of America or JP Morgan, Morgan Stanley, these kind of banks, because they, in terms of the consumer banking wise, they are not much of an influence here. They're more towards the private banking sectors. So HLF is Hong Leong Finance, followed by RHB Bank, I think these are, SC stand for Standard Chart lah. So HSBC, from Hong Leong all the way to HSBC, you must understand that they are considered under foreign bank as less UOB, OCBC, and DBS, which is considered a local bank lah. I think a simple understanding is banks itself. There's a difference between central bank and commercial banks. So central bank is like the MAS. They are the bankers to commercial banks, government, and financial institutions. So they are the monetary authority lah. What they do is, they supervise they supervise all the banks and everything. What they are doing and stuff like that. They monitor the interest rate, which is your SIBOR and stuff like that. They implement monetary policy, but in Singapore, it's rarely seen. Because it has to do with our government system and everything. But if you want to look at countries who consistently implement monetary policy, it would be USA lah. They've been printing money like it's unlimited. So yeah, we can look into them. I mean, if you are interested in studying monetary policy or economics, yeah. So SG Singapore usually relies on fiscal policy lah, because it's more on a long-term basis and it doesn't impact. It doesn't have such a dire consequences, and US is gonna feel it soon, I think. But even being so, I don't understand why the stock price is still going up for them. Yeah. Okay, so for local and foreign bank itself, I think it would be dependent on the location upon where the bank is being set up. However, they still have to follow in terms of the guideline of regulatory of respective central banks in the operating region. So for example, like HSBC Standard Chart, right? Despite being an overseas bank, when they open a bank in Singapore, they still have to follow MAS regulations and guidelines and everything on how they can run the banks in Singapore, run their bank in Singapore. Private banking comparatively to commercial is more particular in terms of selective of the range of clientele they own. While commercial tends to serve the general public. So you can open a savings account with them, but if let's say if you want to invest a sum of money, probably you need maybe a criteria of maybe 10K, 50K, 100K to invest into various private banks lah. That is just in general, but obviously there are much more out there. So yeah, we can look into if you can look into if you're interested lah. Okay, I'll just start on HSBC now. HSBC, the reason why they are so in terms of revenue wise they are at 79 billion is because they are not only situated in the Asia region, but actually they are doing globally. Whereas for like Hong Leong is like pretty small, like within Singapore, Malaysia, for example. RHB is also another very small bank. Citibank and Standard Chart. Okay, Standard Chart is pretty big, but Citibank is pretty small because it's a city group. Whereas their concentration is not as wide as HSBC. Yeah, that's one way I can answer. I'm not sure if I answer your question. I think it would be in terms of the expansion as well as their situated, the location and everything. Yeah. So moving on. Okay. So recently the oil price, aside from dipping, right? Aside from the oil price dip in earlier this month, oil actually has dropped below $0 at the end of last Tuesday. So how are these affected in terms of the banks wise is that I think there's this particular trading company, Hin Leong Trading. On the 9th of April, they have been seen refusal of borrowing from two lenders due to their financial difficulties. And subsequently, reports have shown that they have actually owed over $3 billion to 23 separate lenders, and inclusive of DBS, OCBC, UOB, and HSBC as well. However, all in all, they failed to report $800 million in terms of losses and everything. So on the 20th of April, they actually filed for bankruptcy. On the 23rd, they have actually, in terms of under recommendation and everything, they filed for judicial management, JM, and appoint PwC lah. For those who don't know, they are the big fours lah, as a judicial manager. So what this JM thing is about is actually a route whereby a third party, step into the business to try and salvage whatever they could for the original business lah. However, one thing we need to know is that filing for bankruptcy doesn't mean the debt disappear lah. Yeah. Okay, so going back, answering the question where I get the source from, their financial statement, the annual report. So there are various platforms out there. Aside from the company website, you can look into Morningstar, Yahoo Finance, Google Finance, as well as Share Investors. Yeah. So I think then from the bottom of the slide itself, you can see actually how much they have affected within the respective bank itself. So to understand a little bit more of our own banks, OCBC, DBS, and UOB, is the demographic wise. OCBC and UOB tends to be more of the DBS and OCBC tends to be more on the Asian region, unlike UOB. As well as for their underlying business wise, comparatively, DBS is more of the People's Bank, whereas for OCBC and UOB is run based on more like the family business kind of approach lah. That's the reason. That's also one of the way where we have to understand this company, their business at the same time. What do I mean by more of a people bank is whereby in terms of the trading wise, right? If let's say, for example, I want to do any lending or borrowing, right? DBS is more willing to, whereas for OCBC and UOB, they are more particular. So that's one full of our thoughts on some consideration. And how we can evaluate the company is through the loans to deposit ratio lah. And that's one of the very important factors, like how much money are they lending out and which industry are they lending out to as well. Risk itself that will affect the banking industry will be interest rate lah, depositors' confidence, as well as the current and global affairs, which is in Hong Kong, their current riot and the trade war itself, oil price as well as COVID lah. So I pulled out some data, this all from Morningstar. I think a simple bank comparison is that in terms of revenue wise, net income and total assets. Liabilities and equity, I think if you all could look at the bottom view whereby I actually pull out the ratios in terms of valuation wise to further understand. So right now DBS and actually essentially all three banks, they are all trading below book value lah, in terms of the fair value wise. They are all undervalued and they are all trading below their 5 years average. Similarly for PE ratio as well, they are all trading below. All this data is gotten off from today, accurate as of upon closing at 5 p.m. If you look at whole, DBS is obviously it will be a better bank in terms of their interest margin and everything. For those who understand that a little, the interest margin is better comparative to the OCBC and UOB lah. However, I think it's more than one way in terms of understanding numbers by itself. On top of these numbers, it's also good to understand, like I mentioned earlier, how DBS, UOB, and OCBC runs their company, runs their bank. Are they a people bank or are they more of a family-oriented kind of business and everything? Debt to equity itself, we can compare among these three. DBS actually holding more debts in a sense. In the long run. So if you want to understand further as to why they have more debt comparatively to the other two banks, we can look into the financial statement. Yeah. So far, if you have any questions, just put into the chat. Then we'll get to that in a bit. Okay, so this is where I get all the data from and everything. So this is DBS itself. We are able to view their revenue in terms of percentage-wise, net income, diluted earnings per share and everything, their net margin. Then we can get to see their revenue, their net income, as well as their assets to liabilities, total equity and everything, the free cash flow, how are their financial health and everything. So under valuation, like I mentioned earlier before, that's where we get to see their PE and PB ratio and how are they faring in terms of their 5 years average lah. I would say if let's say the earning was to come out in the subsequent weeks, I will put it, don't take it off face value wise, because we have to understand that business will definitely not be doing well in times like this. So what we want to look into is actually look into 2019, 2018, 2017, where business are more of a norm, because after vaccine were to come out and everything, business will be back on track lah. So things will go back to norm and everything. So what we are looking into is when business are doing fine and everything, because downtimes only happen once every 8 to 10 years. Those major downtimes lah. Then like fluctuation normally happens between the short term, the 3 to 5 years period. Okay, DBS is lagging, but yeah. So okay, so if you look at OCBC, that's why I love OCBC. If you look at the price to earning ratio, right? We are able to see that their current price to earning is 7.82, and they're trading below their 5 year average lah. So that's one way we can look at it. So in the essence of understanding PE, so meaning that every $7 I put into OCBC, I'm getting $1 back. Every $7.82 I'm putting into OCBC lah. Their current trading price, if I remember correctly, give me a while. Their current trading price is $8.84, and their earning call will be in 10 days time. Yes, sir. Okay, it's inverted, but yeah. Okay, yeah, y'all get what I mean. So price to book ratio as well, similarly, is trading below book value. So let's say for example, I liquidate everything. So now is this company is worth more than if I liquidate. So in a sense that if this company go bankrupt, I might get more money back lah. Yeah, probably. I don't know, man. So yeah, we also can see in terms of comparison wise, they're actually trading below their 5 years average lah. So in a sense that we are actually getting this at discount at this point of time. So I'm not saying that you should invest in this company, but I'm saying that you can look into this company. Nonetheless, it's a blue chip stock. For those who are more skeptical in terms of investing and afraid of like stepping into, I think we can take one step at a time. Is you can look into OCBC, the blue chip investment investment plan. This is good. You can put $100 every month. Dollar cost averaging in. See, says blue chip traded $100, lower average cost, averaging everything. Yeah, you need to be 18 and above, like not some parent guardian shit. Yeah, my friend pointed out for me, James. Thanks. He mentioned that yeah. So these are the fees and the charges lah. So if you read accordingly, then you roughly know like $5 per counter, like what you're getting into lah. So without ado, yeah, let's go to yeah, I'm actually done. Thank you. So yeah, these are the reference where I get my stuff from. And for those who are here through introduction of a friend, you can follow me on my Instagram. I'm not promoting my Instagram, but in the sense that if you have a question, you can ask me through there lah. Yeah, so if there's anything in particular, you can let me know. Yeah. If not, y'all can ask the question and can have a mini Q&A before we end the session. Respect to OCB, what is your advice in terms of price to buy? Okay, I don't have a target price because I don't do technical analysis. But one thing I do know, if let's say the underlying business is good, our value average in, which is slightly different from dollar cost average. Value average in is whereby I understand the fundamental, the valuation and everything. Then I will put in when the time, for example, I'll put in during rate days like in a sense. So I don't have a specific buy price though. But I mean like I will put in like for example I'll put in a certain sum, like I will just average, I'll put in a certain sum today, then after that 1 month later, be it the price go up or down, I'll just buy again. Yeah. So any more questions? I hope today isn't as dry though. Yeah. Okay, then I think if not, then I think I'll share a little bit more in terms of investing into market versus investing into companies lah. So investing into market is like in terms of understanding market, their volatility and everything, and trying to speculate lah. That's one thing as a fundamental I'll try to avoid. I'm not saying that it's not good. I mean, there's people doing it, like they are the day traders that are doing it. Nothing right or wrong with that. But it's not my way of approaching investing lah. So cause I would say I follow this thing called the deep value investing lah. So yeah. So anything around it, I should be able to answer. But if not, yeah, I will probably get back to you soon. Something like that, along that line. Yeah. Whereas for investing in the company is like FA lah. Yeah, because no one can predict the market. I feel lah. No matter if you're a trader or you fundamental investor, I feel no one can predict the market lah. If the person say they can predict the market, it's either he coming from the future or he got some black magic, man. Okay, so MAS mentioned that they have this forecast that recession is coming, probable recession and everything. One thing I can say is it's about time, I would say. I'm not saying that how should I put this? personal opinion, I feel regardless whether market is down or up, for those that are employed, I think is a good time to gather more skills in the sense that how you can further value add in terms of your job and everything, your career. I mean, this hopefully that you don't get retrenched. As for student wise, I think it's a very good time, especially COVID, like stay home. I'm not saying that you must be a productive 100%. Like I also like to know. Everyone likes to know. So one thing I can say, maybe pick up a few things, read a few other stuff, pick up a book, try to finish one book within the whole entire circuit breaker within this 2 months period. I think that's one way to start. Learn a bit more about investing. If let's say you need one-to-one, I'm actually doing it. I can spend about an hour with you guys per week. Yeah, because I'm actually studying for my exam as well. So yeah. Why I would choose OCBC instead of DBS? OCBC wise, like I mentioned, they run more of a family business, so they are more particular in terms of who they lend their money out to. Yeah. So that's one key factor that I would consider. At the same time, in terms of valuation wise, as you can see, they are pretty cheap compared to DBS. DBS is still quite expensive to me. Into ETF cost, it is diversifying. KL, hi KL. Into ETF cost is diversifying your portfolio and removes the unsystematic risk. Yes. However, if let's say there is certain kind of company that is within the ETF that is not good, because I'm sure there is bound to yes, I think you take off the trouble of understanding multiple companies, diversifying your risk, but then there's another thing called the management fee which will eat into your profit and that's something that I will want to avoid. If let's say I know certain business is good, I would rather invest into the particular company and get the full return in a sense, so that I don't. The trading fees is really one thing. Then now I'm going to pay another management fee. That's another So I'll try to avoid that. Yeah, thanks. I'd like to know for four weeks already. I mean, which is good. I mean, you finish 20 books. I only finish like about 4 books, 1 book a week. Yeah. Yeah. Investment. There's this book called Deep Value Investing. The Intelligent Investor. I think this one everyone should know. Snowball by Warren Buffett. Millionaire Mindset. That actually teach you, which I'm going to talk about in the month of June. In the month of May. I'm going to talk about in terms of setting your mindset right yeah, I don't want to be some YouTube guru here that can promise you Ferrari or Lamborghini or a mansion, but yeah, I'll be more realistic on that. Yeah, sure. I'll post the books on my Instagram if it helps. Stock market economy, I would say they normally price in terms of the future reference, but I wouldn't say entirely it runs on it reflects 3 to 6 months because I'm not sure how long they price the value in. Okay, can. I'm not sure whether that's a good reference or not, because I don't want to be compared to that guy yeah. I should not say much, but if y'all look into what he has done, then y'all should understand. Yeah. Hopefully this sharing is informative. Hope everyone learn a bit here and there. If let's say for those who are too shy to ask questions, like just feel free to like DM me If y'all need one-to-one or maybe you can grab your friend also, like maybe 2 of you guys or 3 you guys, we can do a separate session offline to discuss more. If let's say you want to find out more how you want to start and everything. Yeah, thanks guys. Yeah, so yeah, if not, I will see you guys next week. Yeah, you all can. Yeah, if not, I will see. I will come up with the list of program of what's going to happen for the month of May itself. Pretty much I'm going to talk about more deeper in depth of how you can start, as well as the mindset you should approach it in terms of the fundamental wise. If you want to have mindsets in terms of a trading a trader mindset, unfortunately I can't provide you with that but nonetheless, yeah. Yeah, Yeah, sure, we'll do. You'll be the same link as well. I try not to change the link. If not, I'll just update on my Instagram and everything in terms of the news and stuff. So yeah. Yes. Yeah, you're welcome, Uncle Chong. Um, yeah, if no questions, then I hope everyone stay safe. I'll see you. I'll come up with the details and everything. Then I'll see you guys next week. And good night. Have a great week ahead. If you have any question, you can just PM me. I'm just 8 numbers away. Yeah. All right. Thanks for tuning in. Bye. Bye bye.